Well, hey there. It's Tuesday night, May 16th. Let's do a stock market review and we'll talk about the stock options algorithm that now has all the companies in here. I did a sampling. I got the questions answered about the bid and the ask prices for the calls and the puts. Now, this information is not going to be updated in real time. However, I did grab a sample, which is really important because now we can get a rating on every single company and how they did today. So pretty cool stuff. And this is basically a mathematical formula that gives you advice on which companies to buy a call and a put option on at the same time, because they fluctuate so much that the amount they fluctuate is more than the cost of both the call and the put. And you can just sell one of them whenever they reach a certain fluctuation point. And it's just math. So we're just doing math. So let's talk about the companies in order for a little bit, and then I'll leave you with Wednesday. I did do this today. I mean, the week's still going on, so I don't know if I've completely made money yet for the week, but everything I've sold so far, I've made money on, and I sold OKE today. And we'll go over that because that was one of the worst performing on the list as of yesterday. And we'll see how they finished today, and I'll explain how I made money on them so far. And it's not even over. I could even make more on them, but I've guaranteed myself profit on that transaction. We're going to discuss how they are conducted. So here's what it's doing. It's saying that Universal Display Corporation, OLED, as they're called, ticker symbol, that they moved 200% over how far they needed to move if you bought a call and a put option at the strike price of 145. This is a really short-term option that expires Friday the 19th. Now that I wouldn't be purchasing any more options that expire Friday because it's already going to be Wednesday tomorrow, and that's only 3 days left. So that's not, you're really starting to run out of time to have movement on these stocks. So you should be looking further ahead. Let's do that. Let's do that. Actually, let's look at the June 16th, way ahead, because even though today OLED moved $9.12, which is $912 in intrinsic option values, how far they moved today. Meaning, if you had a call on them at a strike price of 130 or something, your option just made over $900 because that's how far they moved today. Now, the fascinating thing was that apparently at the beginning of the day, if you wanted to buy an option on them, or whenever I put this in here, sometime today or the beginning of today, their options only totaled $453. What does that mean? What am I talking about? Like, where, how, what are you talking about, Ken? Like, how do I buy this? What it is there's a bid and an ask price for the calls and the puts at a certain strike price. So right now, they're currently at $148.63 a share. They're $3.63 above what an option you could buy at 145. Well, the cost of that option is listed here in a range. These are the range of prices. It's between $290 and $480 for one that expires Friday. That is a wide range. Wow, like that is a $394. That is $190 range here where people aren't buying and selling as much in here, and they don't know how much it's moving. And so there's a very big, wide range on what the price might be. And here it's between 55 and 80. Now, putting in these numbers and figuring out how much this stuff actually costs affects some numbers in here, which I want to discuss. Because even though this is the number one today, they're not necessarily a good purchase because they're too risky, because the spread of their bids and asks is too high. That's what this 35% means. That's a lot. You want spreads that are really low, like AMD here, like Advanced Micro Devices. See, this is a 1.1% spread range. Let me show you what that means. When we go look at them, and this is what I'm going to recommend, basically what I think the algorithm recommends when it comes to companies that might move in the positive direction. And at the top of the list, I think it's recommending AMD on this list out of all of these because of a few reasons, but one of them being this is a mammoth reason right here. These two are really good reasons, meaning the break-even amount that they have to move is only 3.3%. Their spreads are really tight, meaning look at this, $214 and $217, $116, $117. Like there is such a tight market on these that people are bidding them down to the dollar, right? Like this is a very, very highly traded option stock. That's a great number right there. So let's go. I'm going to look them up. And I'm not going to look for this Friday. Let's look for next Friday, the 26th, because 3 days is not enough. So now I'm going to look through the 26th and we're going to rewrite in some information here. And the numbers are going to change, but this is going to be pretty interesting. So at a strike price of 101, they're at 101.73 right now. It's $305 to $315, and the put is between 248 and 252. Now let's go back and refresh, because here's what's going to happen. They're going to move. They're no longer going to have moved 122% of what they needed to move, and I'll explain why. So let's refresh, and let's go find them. They didn't move down too far, but they are further. And now the cost of their options is all of a sudden $560, right? And now what it's saying is that from now until next Friday, if they move like they moved today, where they move $4, that's only 72% of how far we need them to move by next Friday. So if you're buying a strike price at 101, you need them to move $5.6, 5.5%, or you need them to get down to either 95 or 106, 107. That's what you need them to do by next Friday. Will they do that? Well, when you look at their chart and understand that, I guess Microsoft is trying to pump money into them to get them to create chips because Nvidia's chips are getting too expensive, and Microsoft, I guess, wants to, for vertically integrate into this field apparently, and it looks like they're choosing AMD, which is why they're getting so much activity here. I mean, if we went and looked for them inside of the results sheet, we'll check out volume. I started noticing, look at their volume at 90 million shares here. When you sort all of the companies by volume, you start to see that Nvidia AMD is the third most active stock on here. And that normally that would not be the case. So clearly the rumblings and what's going on with Microsoft there is going to change this $165 billion market cap, and stuff's moving around. So looking at this list, I know we're now looking at an option that expires May 26th and not May 19th. When we go back and we put in the one for May 19th, you'll see if you really want to gamble, it's only 177 to 184. It's not that much of a gamble, though. That's kind of what I wanted to talk about. Even though it's only a 3-day option here, when you change this number around, let me explain what they have to do. So now all of a sudden they're up here. They need to move by $3.10 at all between now and Friday. They moved $4 today, and they have crazy volume. So what are the odds that they move more than $3.10 in either direction from the 101.73 that they're at? The answer is pretty darn good. I don't know the number on pretty darn good, but I can tell you that today's movement was 132% of how far they need to move on Wednesday, Thursday, or Friday. So the gambler in me wants to recommend doing this for Friday the 19th, even though that's not necessarily advisable because it's only 3 more days. But I'm probably going to do it anyway because it's only like $300. If you can get this for $300 and try to watch a $3 change in AMD, you're probably going to watch yourself make some money. And then you sell either the call or the put, whichever direction it goes first, and moves more than $3. You turn around and you sell that for like $325 or something, and you've guaranteed yourself like a 5 or 10% profit, and you've still got the other option. So if they change and go a different direction, you can make money on your other option. That's the logic behind buying a call and a put on a company that's active, on a company that has a really good today's boom number, a company that doesn't cost a lot, a company that has really good spread range, which is AMD. Their spread range is now 3.1 on the current poll that I just grabbed. That's great, right? What's another good one? Google. They were also up more than 100% of boom today at some point. You could have sold this because they kept going up. They were at, what did Google finish at? I recommended Google to someone who didn't even buy it, but they did exactly what they were supposed to do. Yeah, they're at 120.09. Let's go and update their options. Wow. So I do have to update the current look at what the option is. So let's talk about Google for still this Friday. So now the call option is a 120 strike price. It's $119 to $129 or $106 and $114. So we refresh. They were one of these two. It's this one. This is very, very good, right? This is the regular Google. There's two Googles. You can do GOG and GOGL. I'm going to do the GOGL one next. Actually, maybe there are not options on GOGL, apparently. Is that true? That would be this one. It didn't show up. Oh, it's because I spelled it wrong. Okay, so GOGL. Let's go do that one as well, because there are two Googles, and I would like to compare their options chains. 119, so that one's a little bit lower. They're only at 119.86 a share. They're very close in share price, but they're never exactly the same, it seems like. All right, refresh. That moves to there. That's a little bit cheaper and moved about the same today, $3 versus $3.13. Yep. So both of those are good because they moved $3 today and they only need to move $2.35 between now and Friday for you to make money. And they're Google. They're also moving. They're just moving around, whether they're going to go up or down. There's clearly activity. Like yesterday, Monday, they were only moving less than 1%. Today, they moved over 3% at certain points. So there you go. Like that's how you look through this. PDF Solutions Inc. Who's that? Is that Adobe? No, it's a different company. So let me sort this. Let's flip it. Okay, we looked at some companies that were doing well and some options that were inexpensive that it liked. What is Rambus? Nah, it's a low, too low. All right, let's flip this upside down now, and let's look at the worst performing on the day, which still made money because you're buying a put and a call. And when the put goes down, you make money here on these ones. So I did OKE, which we could search if we want to do that. This one. They went down today. And this was the easiest money of yesterday. So yeah, these were very inexpensive options. They went down again today at $1.37, but they went down a few dollars yesterday. I had purchased a couple options for about 200 and I think it cost me like $230 or $40 to get them when I finally did. And I sold one of them today for $360. The put is the one I sold. So 360 minus, yeah, I think it was $240 I paid. 360 minus 240. So I just made $120 on a $240 investment. I call it investment. 50% on this. And I still have a call option that's still live. So if for some reason they turn around and go up a bunch, that one can be sold for something. That one's only worth like $5 right now. That's really not worth hardly anything. But weirder things have happened. So anyway, that's the way you do this. Is this company was the #1 loser yesterday, even though they didn't move as much today, they still went down. Right. So let's keep that in mind as we look through this list up top here of companies that got destroyed. So something bad happened with C Limited American, SE. I'm going to look up their options right now. They're still pretty cheap. They moved by $15 today. Their spread range is not bad. Let's go update their spread. So this is what you do have to do every time, unfortunately, because the bid-ask prices, I cannot get them to be dynamic and query them yet. $72 strike price, 173, 189, and the put is between 120 and 134. So that's a 9% spread range, which is not bad. Anything under 10% is good, and under 5% is really good. So 9% is pretty good. Well, you're talking about paying $300 if they move. I mean, oh my God, if they move 1/5 of what they moved yesterday, Tuesday, you make money. Wow. I mean, wow, right? I mean, they move 5 times the cost of this. That's I mean, that's signaling by why on earth did they move and who is this company? I don't know the answer to that. That's not actually what this algorithm does. We would need to look that up, but that is still really cheap for a $15 mover. I'm tempted to go, I want to look at their chart. Even though you guys aren't going to be able to see it. I just want to see like if something happened prior to the open and then they didn't move anymore. I just want to take a look. So yeah, so they kind of dropped a lot at the open. So there was some type of news on pace for record percent decrease. Why are they trading lower? This is one of the things where I feel like asking AI Bing or something. Company reported worse than expected earnings. All right, so there's no more news coming out of there, but this is still a humongous drop. And so the math that we're doing here is we're doing this. We're saying, what is this divided by this? And when this number, really absolute value of this, because it doesn't matter if they go up or down. It just matters if they move. I know, I'm going to fix it. I'm going to fix it. Stop. What's going on? Stop it. No, I don't want to do that. Try to fix the formula for me. All right, now let's do that. So this right here is saying basically 19, it's really this times 100 or divided by 100. It's giving you a percentage that you're paying over its today's move amount, right? And what I mean by that is like these are great deals. It means that if anything remotely close to what happened today happens tomorrow, you make money. That's what that means. So what we're looking at is a low number being really good here. You can see that number is it's very, very big most of the time, meaning a lot of these companies are not good purchases based on how they move today. But the companies at the top and the bottom are going to be good purchases like this one. And so here, yeah, if they move 20% as much as they moved yesterday, you have to make money. Only paying $300 for these options. So I have to recommend that. I mean, that's see how different that is. See how much bigger this number is than especially even the ones that were going up. When we look at the ones that went up today, not the ones that went down, there was only a 2-to-1 with the Universal Display Corporation. That number of 5-to-1 is distorted, right? And so it's saying that this should be more money, saying these options should be $700 and not $300, or at least 500 or 600. Like this is still really cheap. Something hasn't caught up with them here. Archer Daniels is really inexpensive, and while they're not huge, I mean they're okay here. Like this was still extremely cheap. I bought this today and I'm almost up 2-to-1 on one of them already. Once again, here's something that moved almost 3-to-1. Look at the movements here. These are bigger movements. All these movements are bigger in absolute value than the ones that went up. So we really should look at them. This is 500, 800, $400. So these are getting into the more expensive range, I start to feel like. Papa John's. Here's one. Not expensive. Don't have to move much. Moved $4.52 today down. Let's go take a look at this one. I don't think John is running the country anymore. Shatner or something is his name. I'm looking them up and I'm going to get a new option price on them. They do have good ticker symbol and PZZA. They don't mess around. we're still looking at the 19th, which is really, really getting risky. But there's a $70 call at 120 to 300, and the put is 20 to 35. So the spread range is actually not good. So that would be a sign to not do that, because this spread range of 51% means you don't know the true price of this here, and it's looking distorted. So we're going to stay away from that. Remember, we want that number to be low. Caesars Entertainment. I mean, what about that? Let's check that out, because that spread looked really good. Caesars, yeah, has an 8% spread. We're looking that one up, and the answer is it's frozen on me, which means it's about time to stop doing a video. All right, so point is that this algorithm is now kicking companies out and providing a tremendous amount of information, and it does things like saying if you can get options for $300 even for the next 3 days on this company that just moved $15 after announcing earnings, you're probably going to find yourself seeing this company move at least $3 in a direction tomorrow, because there are too many people that either made or lost money on this earnings announcement, and it caused them to change their thought and financial position on this company, which is why it moved by so many dollars. And those people are going to continue to filter in and make action tomorrow as the dust settles, and the dust settles involves this company. I mean, like what's the average that a company moves after it moves a big day like this? At least 25 to 50% usually, which means it's going to move at least $3 to $7 or $8 probably tomorrow in some direction. That's much more than 3. It's why it's a really good chance between now and Friday of this moving somewhere between 75 and 65, something like that, to have a $10 range of number instead of just 3. Yeah. There you go. I mean, that's what this thing does. A company I'd never ever look at or understand or whatever, but the algorithm here is just kicking out beneficial value situations where options are inexpensive compared to how much they might potentially move in the short term, based off of today's activity and also based off of volume and price and everything. So it's just throwing stuff out there to I mean, just to tell you what to take. It's crazy. It's crazy. As a matter of fact, yeah, one thing I want to check out before we go is I wanted to see the company with the best spread range. Let's go with this. Ascending by spread range. Like who's got the tightest spreads? Microsoft, then Tesla, then Nvidia, then Amazon. Notice the prices of these. I mean, and I need to update these obviously to get better prices, but like, see this, how like Tesla's got to move by 4 to 5% a week for you to make any money, because it costs almost $800 for their options. See how this number is terrible? Like they only moved by 17 cents today. So they didn't even get close. Did any of these do well? You want this number to be low. We don't even need this number anymore. Basically shown here as well, right? Like Microsoft moved half as far as they need to move today. They moved $228 in intrinsic option value. It costs you almost double to buy that. So they got about halfway there today if you're looking at them to go up. You can see Amazon moved a little more so because they're a lower share price. They also moved $2 and they're cheaper. So on this list, Amazon's looking good as one of the ones that's more available. Meta, $500. PayPal, I own PayPal. Yeah, their put went down. I almost sold my put today, but I have one that expires Friday. We'll see what happens tomorrow. If they go down in the open tomorrow, I'm selling that and I'm going to be profitable on my PayPal investment. I saw that one last week. They popped up on this list last week as I was building the file. Look at how inexpensive they are. Let's double check that. Actually, no, that's current. Actually, it's pretty current. I think that I looked at that at the close. Amazing, right? Like super cheap. They moved almost as much as they need to move in entirety of the week today. So you'll see if they bounce back and go up, but they've had a lot of bad news and like no CEO and an earnings call is leaving people disappointed. So this company is not having good news, and that's just really, really cheap. Shopify is cheap. Also, yeah, super cool stuff, guys. This is like a trading robot basically at this point. I just need to automate the way the bids and the ask is. The bids and the asks are kind of, I guess, fed in here. I need to get them kind of automated, which even if you try to use like Python or something to connect, I don't know if the bid and the ask is a public queryable thing. I looked on Polygon or whatever, and I didn't see the bid and ask price as one of the things that you could query. So it's almost like you have to look it up. It's changing all the time anyway. So even though we get a static representation of what companies were at a certain point when I harnessed that data, which is not current, it's helpful, but you still have to go in and look current and change it currently to get the exact answer before you make a purchase. Because I don't know if this GE healthcare is, if it continues to go up like it did today, like what the options cost. I think the option costs are still pretty inexpensive there. But you know, it's kind of like you have to do your research and your homework right as you're doing this. That's when it becomes valuable. Or that's when you get the best idea of what the prices of things are. So what am I going to leave you with for Wednesday? I'm going to say that AMD, because of its extremely low spread range and reasons why they're just getting activity and volume, that this is the best one on the positive side. If you're rooting for companies to go up, although it does not matter with the strategy, because if it's up or down, it does not matter, then I would go with AMD. You can see Google is also inexpensive and a lot of fun right now as well. Both Googles. That's what I recommend on, and I have to recommend that one that's down 5-1, even though I don't know the company. I mean, this is crazy. Like, this is way too cheap for this. So waking up in the morning and buying this, if you can get this at 300-ish bucks, I don't know which direction necessarily they're going to do. It's probably down some more, actually. Maybe it'll be recovered. Who knows? You don't know. That's the things you don't know. So you got to get both. But man, the chance of them moving $3 or more is really, 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 really good based on history of things. Like this should be like this or this. Like it should definitely, this should be $500 options. Like they should be planning on this company moving $5 in one direction or the other before the end of the week. And they're not. They're saying it's $3, and that's where the value is. And we can get into a weird situation where you get a hold of these in the morning on Wednesday and you sit back and you watch and you're like, wow, you know, either it doesn't move and all the action's over. The news was yesterday and they sit here and they hardly move much at all. And you're like, man, Kenny, you're whatever. But there's also the chance that, like I said, at some point before Friday, people make action again. And this thing moves by like $5 or $6. You're like, wow, I just sold this thing that I bought for $300 for $600. And then you still have another one. You still have the one that's going the other way that you didn't sell. Like this is a really, really good chance that they move. So we'll start to rate these things by their boom numbers, and that will help us analyze how this works. Super cheap Kraft Science options. I bought 2 of these. I bought 2 of these things for really almost no money. I just wanted to see how this works with a company that's generally not that volatile. But keep in mind when you're buying these, you're buying, especially when you get them at the same strike price. Okay, then wherever the price is, the price has to land somewhere. You get a dollar per penny it is away from your strike price, whether or not it's a call or a put. So I got a strike price of, I think, 39. I think I got the 39 one, and they're right about at 39. Let me check them like this. See if I can get in there. KHC. It sounds like KFC. It's definitely not. Let's see if they'll let me get in here. I just want to check that because here's something that's going to move hardly any at all. They're exactly at 39. That's funny. They're right on the button of my strike price, I believe. So here's what the price is right now. So this is cool. So 39, from now until Friday, $24.32 or 23.28. And yeah, I bought some cheapies here because I thought, all right, are you telling me that you make money if the price lands anything more than 54 after a contract fees? Call it 60 cents. You need to be 60 cents away from 39 at some point between now and Friday. Like, is this company going to move 60 cents when their share price is a little under 40? I mean, that just seems like such a small amount. Now, maybe I'm wrong, and maybe they really don't move very much, and they move, and they perhaps won't move 60 cents. But I'm willing to sit back and watch this because this is what I'm talking about. The lowest number here possible that you can get, you're just then waiting for pennies in any direction, right? Like, this is what's the cheapest option available? That makes me want to know now. Like, who's the company that I guess the people that are selling options think is the least moving company? Wow, here we go. Now these ones are going to be in the $20 share range. So I want to say almost like I like to see an outlier here. National Instruments. Extremely cheap, and they're a $57 stock. They probably hardly move, but this is still like, you're talking about a 70 cent move in a $57 stock from now until the end of the week. And you can also look up further times in the future. Here's one. What? Blackstone is a $250 share. It's only 70. I can't believe that. I gotta look that up. I gotta look that one up. What? Maybe I typed this in wrong. BXSL. Yeah, they're not 250, they're $25 a share. See, you can find out when you screw up and you make errors because they pop out on the table. Yeah, I typed all these things in, so they're not all perfect. Yeah, that just moved. All right, so that makes more sense now. Yeah, a lot of these are not very much shippers, but still they're really expensive. And it's funny, like just a 48 cents change in the PPL company, and you have to make money. That's funny, right? Like, how far do they usually move? Let's take a look at this. I'm sure they don't move very much, but I just want to check. Be like, did they ever move more than $1? I mean, over the last week, they went from 28 to 28.50 to 27. No, they don't move very much at all. That's why. No, they don't move, but it's still $48. And that matters because, for example, if you could get two options for the cost of like $3, say they were $1 each at the same strike price, all the company would need to move is 3 cents in either direction, and you could make money. And just thinking about it that way is why I kind of like sorting by this, because you then see that, yeah, 48 cents in any direction and you'd make money on 50 cents. Let's call it that. So it makes me want to at least try it because, I mean, wow, like it's not difficult for you to lose, I guess, because they might not move half a dollar because they're not a big mover. But it's also really, really low risk because even if they don't move that much, you're still going to be able to sell your options for some recovery value, depending on where they are. So, I mean, what kind of risk on this $48 is it? It's probably, I mean, wow, like that's not a lot. The risk, I mean, maybe you're risking like 12, $15 at the most out of that. You could always recover this thing for more than $30. They would have to be hanging out right exactly between like 27.90 and 28.10 or something for you not to be able to get at least $20 back, $25 back there. I mean, that's just really, really odd to think about something staying like that for a long period of time. And when I say long period of time, I mean more than just days. I wouldn't look at just Friday. I'd look at months and the stuff in the future and really compare this. But that's just really, really cheap. It's really cheap. It's really interesting to think about the math here. All right. So good luck, everyone. I hope your trades won today. AMD and the other one at the bottom, C Limited, which is SE. Yeah, AMD and SE. Those two are getting bought by me in the morning. AMD, I mean, AMD is not as timely as the other one. This is the one I think you have to get on. This is the one I'm actually going to buy first because it has the highest absolute value change in amount versus what you need, and it's reasonably priced. That's why. Even though I know nothing about the company other than they reported worse than expected earnings yesterday. All right. Good luck, everyone. May all your trades be winning. May all your stocks be volatile.